Hey traders, Raghee here, and in this free recap video I want to kind of cover what my overall approach for this week is going to be. Now it's the end of the month. Now some of you may not be aware of the end of the month phenomenon. I think Wall Street Journal one time called it the black magic, and how to understand what happens with say pension fund or retirement withdrawals starting about 8 to 3 days out from the end of the month, and then how the beginning of the next month tends to see some of this money go back into the market. And you know, one of the things that's really interesting about this kind of rhythm is basically how does that work within the context of what is a lot of fear and possibly even a lot of investors thinking that this is a downtrend. And I don't think they're wrong, but will we see that same, I mean, we're still going to see the withdrawals, right? We're going to still see the end of month redemptions starting about 8 days out, and then most intensely 3 days out, right? That's still, I think, a part of the rhythm. But there's two things that are interesting this time around. One, at the end of the month, we have the G20 meeting. And if there's any good news about China and the US and some sort of trade war ceasefire, even something as simple as kicking the 25% tariff, the increase of 15%, kicking the can down the road to March, the market would like that, even though it's not necessarily a major move or change in the overall relationship. It would be kind of a softening of this hardline stance of this Jan 1st increase of 15%. So this kind of idea that the end of month creates redemption, I think, is going to be still a pretty heavy weight for this market to bear. And then what I'm looking for is this, and this is not going to apply to the Russell or to the NASDAQ. So I just want to remind that. I don't want to be looking for bottoms and things like that on these two markets. It's really mostly the Dow and the S&P because of two things. One, they're both in distribution, and the idea of an oversold bounce is actually valid, unlike the NASDAQ and the Russell. And two, if any two markets are going to benefit from some good news, as I'm calling it the G20 Rip, some sort of really dramatic quick move higher, not just a correction or maybe even a retracement of about 50% of some of the last major move, maybe up to about 25,000, even a little bit higher, 25 even to 25.5. But what we're talking about here is just a move higher on that optimism, maybe kicking off the Santa rally. That's a big maybe. But these two markets are actually valid to talk about the idea of an oversold bounce. And that's really also very important. The underlying structure of the market validates the strategy, not this random event of the redemption to the beginning of the year, not this G20 on the schedule. This is actually technically, and from a structure of the market, 100-year-old Dow theory, still valid. So that's something I'm looking at here. And what I'd like to do is wait for the market to reach this oversold area, and in that oversold area, look for opportunities to buy calls. This is going to be a market that I'll be looking at predominantly to buy call options, whether that be on the DIA or the YM, whether that be on the SPY or the ES. It's going to be the same thing. Now, how can I look for oversold levels of support and get long? And that's the idea here. How do I get long in a market that could be primed for an event that could cause a rip higher? Now, a rip meaning a very dramatic rally, very volatile rally to the upside. So we'll talk more about this, but think about what could happen in certain holdings that you might have. You know, where are you short that you might want to start trailing a tighter stop, right? Where are you long, or where would you like to be long if the S&P and the Dow were to rally? Right? Those are the kind of questions. Which sectors, by the way, let's take it one step further here. Which sectors are going to benefit from that type of move? You know, which ETFs are poised to bounce if the Dow and the S&P rally. So think about how you can position yourself, what stocks are in each one of these heavily weighted names that could also move up higher with overall risk appetite in those broader averages. So again, it's a very holistic view. We're starting this conversation on Monday. We'll fine tune throughout the rest of the week, and I will see you in the next update.